Welcome to For Better or For Court, Family Law in New Jersey.
Welcome back to For Better or For Court, Family Law in New Jersey with Ms. Alix Claps. Alix is a partner at Heyman & Fletcher and a certified matrimonial law attorney who helps New Jersey families navigate divorce, custody, and complex family matters with clarity and care. I'm Evan Mack, and today we're talking about the financial side of divorce, the hidden costs people don't always see coming, and how little planning can prevent problems later on. This is the hidden cost of divorce, what people forget to plan for. Ms. Alix, hello, how are you? Welcome back.
Hi, Evan. I'm good. How are you?
I'm good. It was good to see you. When clients first come to you, what are some of the financial surprises that tend to catch them off guard?
In terms of the costs of a divorce, sometimes they don't recognize, depending on the level of discord in the divorce and the level of complexity, an attorney is not enough. They're going to need an attorney. They might need a custody expert. They might need a forensic accountant. They might need other facilitators like QDRO people at the end of the day. So there can be a lot of additional costs that go along with the divorce beyond the cost of an attorney.
But why do you think so many people underestimate the cost of divorce? When they've done some of their research.
If I had a nickel for every time somebody came in and said, my divorce is really simple, it's way too many people think things are more simple than they actually are, because then you get into, it's simple because the house is in my name or my spouse's name. Yeah, but that's not the end of the inquiry. The inquiry is, when did you buy it? What did you use to buy it? How long did you live in it? Did you do anything to repair it or improve the value of it while you owned it? What is it worth now? There are a lot of other questions that go along. It doesn't matter whose name it's in. It doesn't matter to a certain degree when exactly you bought it, except as a factor in a larger calculation. And sometimes that means having to pay a couple $100s for an appraisal. If you each get an appraisal and they don't agree, how do we reconcile that? Those are all expenses that you may not anticipate if you don't do this every day.
Oftentimes we talk a lot about dividing assets, but what about creating two separate households? What kind of new expenses come with that?
That is one of the current biggest problems, especially up here in New Jersey. You got to set up a second household. You've got rent costs or mortgage costs now, and that's the largest chunk. Obviously, we're talking about now you're paying maybe an additional $4,000 a month because you've got two households instead of one. You've got electric bills, you've got auto insurance, and you're not paying half of what you were paying before. You're paying 2/3 because there's a family discount when you bundle stuff, and that no longer exists. Then maybe because of the way you've got your custody schedule, you've got additional costs with before care or after care or babysitters, things like that, summer camps that maybe you didn't have when you guys were together, but you need now that you're trying to track two separate lives.
So Ms. Alix, how important is it to understand your full financial picture before even attempting to file for divorce?
You have to understand it at some point during the divorce. It will cost you less if you do more information gathering before you file. But that's part of what I'm here for, is to ask the questions, to help you figure out what documents you need, to put together the spreadsheets and the lists and all those things, to look at what was your marital lifestyle, what is the income that you have to work with, what do you need in order to make your single lifestyle work in a manner that is somewhat, it's never going to be exactly the same as your marital lifestyle. We're not that naive, but it's got to be close. You can't, if you are living a marital lifestyle, you can't then go from having a six-figure income to needing state benefits. That's not remotely the same, and the court's going to have a problem with that. So we got to figure out, what are we looking at when we're looking at shifting from a marital lifestyle to a single lifestyle?
Are there specific documents or records people should gather in the early process to avoid problems earlier or maybe even later?
Definitely. When we're talking about financial documents, a lot of institutions only keep them for 7 years. So if you've been married longer than 7 years, or you're getting to a point, get as many old statements as you can. You can always get, the new ones are easy to get. So if it carries on, if you don't file for another year and you need that last year, that's easy. But get the oldest ones possible as soon as you can. It also means, and if you're willing to do some of the legwork. So if you are willing to go physically into your bank and get them to give you stuff, or to go and click download, 15 times instead of making me issue a subpoena, that's going to save you money by doing a little more of the legwork.
So beyond the obvious costs, like the attorney fees, what hidden or after the fact expenses do people often overlook?
Sometimes people don't recognize that the court charges you a fair amount of money to get divorced. There's a filing fee for the complaint. There's a filing fee for an answer if you file a counterclaim. And if you file an answer to a counterclaim, there are fees related to that. In where we are, there's a parent education class fee. So you pay an extra $25 if you have children, because the court wants you to sit there and they give you a lecture about how to co-parent. Then there's fees like when you're dividing up retirement accounts. Sometimes you need what's called a qualified domestic relations order. These are very specialized documents. They have to be done in accordance with federal regulations and individual plans. So there are specialists who do that. So that can cost you several $1,000s depending on how many plans you need to divide. If you need an expert, if you need a mediator, you have an attorney, your spouse has an attorney, and the court's ordered you to go to mediation. Suddenly you're paying for 3 attorneys total. So it happens. But sometimes that's necessary.
So how do things like health insurance, car insurance, or shared family plans typically change once spouses separate?
Health insurance is also a huge problem, a huge concern for families. On whose insurance do the kids stay? How do we reconcile those costs? Does each spouse have employer-based health insurance available? Is somebody going to need to COBRA themselves for a while after getting divorced? That's extremely expensive. That's a cost you didn't incur during the marriage. What's everybody's eligibility? Divorce is a change in circumstance that allows you to get on a new plan at any time. You don't have to wait for open enrollment. It's a qualifying event, life-changing event, but the out-of-pocket costs can be a killer. And the health insurance market is in constant flux. It's a little bit better now that kids can stay on until 26 and pre-existing conditions don't currently bar you from getting an insurance plan. But if we go back to pre-ACA circumstances, which is I don't know if it's a likely possibility, but it's a possibility, then we're suddenly dealing with, can this spouse even get individual health insurance?
So what about taxes? Or are there filing or deduction changes that divorced couples need to prepare for?
There can be. In some circumstances, it doesn't change whether you're married filing jointly, married filing separately, or filing separately. If your income levels are fairly close, it doesn't change things too much. You have to figure out who's taking what deduction, though, because there's mortgage interest and property tax deductions. There's the child dependency exemption, which both parents can't claim one child in the same year. You've got to alternate. So sometimes before there's an agreement, everybody goes and claims the child, and suddenly one person's return gets bounced, or that's just inviting an audit, which is an issue you don't want. So you do have to think about things like that. In addition to taxes, you've got to think about a 529 account. If you've got children who are young enough, you're still saving for college, you've got to figure out who's going to be the custodian of that account. How are we addressing deposits into that account? How are we accounting for that? Even if you don't know now, you got a 5-year-old, you don't know how much college is going to cost in 13 years. Who knows? Where's the kid going to go? We have no idea. So all we can do is make plans conceptually about how are we going to address these things both now and as we move towards the end of the day.
Do people usually think about revisiting their will or estate plans after divorce, or is that something they often overlook or it gets forgotten?
There are two extremes. There are people who do it too soon, like while the divorce is pending. Don't take your spouse out of your will while the divorce is pending. You can't do that. You have to maintain the status quo, at least in New Jersey. Don't be writing people out of your will until you're actually divorced. But then once you are divorced, don't forget to change your will, or change a power of attorney, or a beneficiary on a plan that is a non-probate asset, like your retirement account, or on a bank account. You may have your spouse listed as a beneficiary on things that you don't remember, and you got to make sure you take that person off. I mean, sometimes people do leave their spouse because they have minor children and they want that spouse to be using that money to care for that child. There's a level of trust there. Sometimes you have to designate the spouse as the beneficiary of certain accounts with the idea that they are in their capacity as custodian of the children. Things like life insurance beneficiaries, you want to make sure you're not just leaving it to the spouse. Sometimes you do, if it's to secure your alimony obligation, you have to name your spouse as the beneficiary so long as you have an alimony obligation. If you have a child support obligation, you name the other parent as custodian for the children so long as you have a child support obligation. So there may be varying points in your life when you have to make changes to beneficiaries. If we are in New Jersey and we settle your case and we do a marital settlement agreement, In most instances, there will be a clear waiver of any right to inherit.
Okay.
But if you don't want to have you don't want you have your estate having that fight where one document says one thing and one document says another, and we don't know if that was an intentional choice or an overthought.
For clients worried about affordability, what are some practical ways to budget or plan without adding more stress?
It's tough. I think, and look, lawyers structure their fees differently. I think all attorneys, family law attorneys, require a retainer. So that's an initial upfront payment. Some require you to replenish a retainer if it gets below a certain threshold. Like if it gets below $2,000, then you've got to bring it back up to $10,000. Some of them won't. Some will say, we'll use the retainer and then we'll bill you monthly. But if we go to trial, you're going to have to pay a $30,000 trial retainer because things happen. There's also the idea, though, of being what I would call penny wise and pound foolish, going to a cheaper attorney who maybe doesn't know what they're doing, or not wanting to invest in an expert in a child custody dispute and finding out you need one at the last minute and that being a huge expense or a lost opportunity to do a better job of presenting your case. So you have to figure out, how important is this issue to me? What am I prepared to sacrifice if I don't spend the money?
And finally, if someone's listening and just starting to think about divorce, what's one financial step they can take right now to protect their future?
Become a documents pack rat. If you get your credit card statements emailed to you every month, download them, stick them in a folder. You don't have to print them out. If you get them in the mail, stick them in a folder. Don't just throw them out once you've paid the bill like so many of us do. Keep your utility bills. Keep any piece of paper that comes in with financial information about your household. That way it makes it easier when I need you to look back at, well, what were your utility expenses for the last 24 months so we can average it? Because we need to do that. And that's not something people think about regularly. And look, when I understand also, when you're deciding whether or not to get a divorce, that is not at the forefront of your mind. You're thinking about your emotional state, the state of the dynamic between you and your spouse. And those are the appropriate concern if you're making a decision about whether or not you can stay married. But the process of divorce is forward looking. It's about figuring out your life after, and knowing where you financially are is very important in order to make those decisions in order to finish the divorce. You know, being prepared before you start is how you finish faster and more efficiently. I'll say. I won't say cheaply because that's got negative connotations, but efficiently.
Awesome. Miss Alix, thank you.
Thank you.
Awesome. And thank you all for joining us on For Better or For Court, Family Law in New Jersey. If you're considering divorce and want to understand the financial side before making any decisions, visit HeymanFletcherLaw.com to connect with Miss Alix Claps. Don't forget to like, subscribe, leave a review, and share this with someone that might find this information helpful. Thank you so much, and we'll see you next time.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.